Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, August 19th, 2009. Well, folks, we're seeing a nice little update on Wall Street today. As you can see, the market gapped lower on major weakness in Asia. China coming down hard, now down 20% off our pivot high call on China of about 2+ weeks ago. That's a 20% decline in the Shanghai index in just about 2 weeks. Unbelievable weakness there, and you've really seen that market. Remember, 20% denotes a bear market, so in 2 weeks, they've gone from a market that was up 100% off their lows to down 20%. Absolutely amazing to see that action. And again, we had called for the pivot right at the beginning of August, exactly dead on there in the markets. Now, a couple things to go over, folks, today, because we do have some action in this market. First of all, the Dow is up about 91 points. NASDAQ is up about 14 points. S&P 500 up about 9 points. So a little bit of an update here, just about 0.75 to 1% higher across the board on the indexes. What you can see right now is the market's actually hammering on some resistance. This actually happens to be a good little gap fill area you can talk about, which is right around 100 spot 30. So I'm going to take you and show you exactly 100 spot 25 to 100 spot 30, and I'm going to show you exactly where that is going back, right to this level. See this last big candle that shot up? If you take the highs of that low, really the low of that candle, then right across those pivots, and again, if you scan it back even further, you can see comes right across the top area of here, but again, right here, this is that level. It's 100 spot 25, a good cycle resistance level right here, and the market should have some trouble getting through that point. Now, on the upside, you've seen a monster move. Now, why has the market ripped higher? Remember, Asia got crushed last night. China really got hammered. The Nikkei, the Hang Seng was down about 1% or so across the board. So the question is, we gapped lower today. What caused the massive upswing? All you have to do, folks, as simple as it is, look at the dollar today. The dollar is the exact opposite of this current chart, and I'm going to show it to you right now. Let's take a look at that UUP chart. Look at this. So the market's here on the UUP, and we're going to talk about the UUP because it's the dollar index. Hard drop, sideways, hard drop, and now some sideways action. Watch it how that, remember, down, sideways, down, sideways. So in theory, it should be the opposite on the spiders. Up, sideways, here. So I just want to point that out, guys. This is a direct correlation. This market is totally driven by the dollar. Now, why? Many of you may ask, well, why is the dollar so important? What does it have to do with? Why not earnings? Why not HPQ earnings? Well, because bottom line is a large majority of the indexes are made up of oil stocks and commodity stocks. So when you have a move in the commodity, which again, when the dollar drops, oil spikes. Take a look at the USO today. Look at this move up on the USO. Absolutely tremendous move up on the USO. Want to see the GLD? Look at this, nice move off the lows on the GLD. So when you have a large move in commodities, folks, that's going to bring the indexes up because a lot of the stocks will trade up that are commodity stocks. They'll trade up when the commodities trade up, and they have a direct implication on the indexes. So you really see that as a key here, guys. Absolutely huge. And the dollar, again, getting slaughtered today. We really haven't seen a major downdraft in the dollar in quite some time, but this is, without a doubt, a big down day on the dollar getting punished today. Again, watching it very closely as it's buoying oil up. Oil today, spot crude, up $2.50, $2.40. Markets are starting to come in a little off that resistance. I'm going to put the SPY back up. This is the intraday 10-minute. You can see it start to fall. Now, I want to erase these lines because I don't want to confuse you with our master levels here on the intraday charts. Now, by the way, I only go over the intraday charts for you guys on the free videos because we cover the 60-minute, the daily, the weekly, the monthly of all the indexes, all the commodities and the dollar and so forth in the nightly videos for our premium guys. So I just give you a little taste of what we do. But long story short, you can see the market gap down to a double, triple bottom here. A lot of support at this 98 level. 98 to 98.25, really major support on this market. As soon as it gapped down, though, you started to rip higher. You paused here, consolidated. That's a bullish consolidation pattern as clear as a bell, and I'll draw that in. You know your patterns. We focus on price, pattern, and time. It will tell you every major move in the market based on price, pattern, and time, and that's exactly what it did today. Support right down here, time, rally, boom. Sideways consolidation. That's a bullish consolidation pattern of a big move up. What does that mean? We're going higher. Now, what did you have here? A mini consolidation, a little move higher, right into resistance. Now you're starting to come off that resistance line right here. You can see us ticking down just a little bit. Got to know your resistance. You got to know your price pattern and time. We give guidance, we educate, and we give picks in the research center. That's the key, guys. We're all about educating. We're going to try to teach people how to fish, not just give them the fish. That's the bottom line. Anyone can just call out picks. We want to show you how we get to that, how you guys can do it on your own for your own stocks, whether they're small caps or mid caps, whatever they may be. Now, a great couple of stocks today to talk about. Hewlett-Packard had earnings, gapped lower, but has rallied all the way back up on the news. Here's Hewlett-Packard again, had earnings yesterday after the bell. Today gapped down pretty weak and then has come back up, but it looks like it's starting to roll. Now, why is it rolling here? Because it hit gap fill. Look at this resistance point, and you have to know this stuff. All right, great shorting opportunity right at this high, and you're pulling off nicely now. Look at this little pullback coming in HPQ right at gap fill from yesterday. Know your charts, guys. Unbelievably important. You can make so much money out there if you understand the charts. Too many amateur investors just take for what the media says it's a heart. They buy and they get crushed. Bottom line, you know, when we were warning in 2007 to be in cash, that was the dead right call while the media was pumping the markets when they were at their highs. You got to go the opposite. You got to look in. You got to do a little hard work here. We'll do most of the hard work for you, but we're going to teach you how to do it as well. And HPQ coming down, just as I call that resistance level down, you can see that little bit of a red candle forming. I think this HPQ comes down to at least this level right here at around 43.75, maybe even as low as this 43.65 level on a pullback, because again, gap fill very, very key here as resistance. Again, a lot's going to depend on the spiders and how they react as well. Spiders right here continuing to pull back. This is a major resistance. On a pullback, you're going to look for a 100 even number as resistance. After that, you're looking at the 200 moving average at 99.80, 99.75. That's also a master level. Below that, you have the 20 moving average right here. Then a key level at 99.50 to 99.40, and another key level all the way back down to about 99 even number. 99 even number, very, very good level right down here. Those are your levels. On the upside, if you happen to get through 100 spot 25, we actually got to refer to this chart here on the 60 minute to see if it gets through. And if it gets through that level, what you're going to look for actually is your next major level will be right here at 100 spot 70, 100 spot 75 on the SPY. Now the SPY correlates very, very closely with the S&P. That's why we use it here to discuss. But any way you cut it, folks, dollar today is the reason why this market's up. It's not because of HPQ. HPQ is flat on the day. They had earnings yesterday after the bell, gapped lower today. All right, bottom line, dollar weakness causes commodities to rise. Commodities rising cause commodity stocks to rise. Commodity stocks are heavily weighted in the S&P and in all the other indexes, like 3M is a good case, ExxonMobil. Let's take a look at those, guys. 3M. Look at this. Look at this chart on 3M. By the way, just hitting major resistance right here on 3M, but look at that chart. That's a 3M, Minnesota, 3M, that's a mining company, 100%. Guys, then take a look at ExxonMobil. Alright, does anyone need any more explanation? This is as clear as a bell. You can see it beautifully here. The rise in these commodity stocks are causing the market to go up today because the underlying commodity's up, because the dollar is weak. Just as simple as that. You just have to understand what's going on. Many people will talk about it today and say in the media, oh, the market was up on this news or that news, or, confidence here. Nonsense. Dollar, guys. Simple as can be. In addition, that's probably one of the easiest things for the Federal Reserve to manipulate down to cause the markets to go up. Alright, and sure enough, we've seen a lot of upside on the markets over the last week. The markets have been down, right? But now, one day like this, and you have a nice pop in the markets. Very simple, guys. It is really, really simple to understand. Don't think through it. In fact, you're seeing the markets continue to come down. I just called that resistance area right here. Look at the pullback we've seen on the SPY. This is the 10-minute SPY chart again, and it's really as simple as that could be. Just looking across the board, folks, trying to focus in and seeing what else is going on. USO up $1 today, although it's right into resistance. I called this out in the chat in the Research Center video last night at 38 resistance. It's right where you are right now. Taking a look across the board, Goldman Sachs hovering here just down about 75 cents. So you can see that JP Morgan, take a look at JP Morgan too. Considering what the markets are up, JP Morgan's actually down 13, 14 cents. Goldman Sachs is actually down about 75 cents, 78 cents. So you're seeing that this is all commodity based. And again, what does that do to the dollar? Clear and simple. All right, folks, enough for today. I hope you guys learned something. That's what we're all about here, teaching you to fish. We'll give you the picks. We'll give you the guidance. We'll give you the education. You take it from there and do what you want with it. Enjoy. Come join us in the Research Center at InTheMoneyStocks.com. Come join the chat room. Great scalps in the chat room today. Phenomenal. Tons of scalps all morning. Really some great calls out there that we made in the chat room for people to make some good money. And we'll talk to you soon. Take care, folks.